Hey there, Investing Iguana fans. Iggy here, and today we're diving deep into DBS Group Holdings, one of Singapore's banking giants. In this video, I'll be breaking down their latest financial results, giving you the inside scoop on their stock performance, and sharing some juicy analyst predictions. In essence, I will be reviewing the 7 key slides from DBS Group Holdings 2Q 2024 financial results August 7th, 2024. So, grab a snack, get comfy, and let's get started. Slide 1. First off, DBS is showing some serious muscle in their latest report. Their net profit jumped up by 4% compared to last year, hitting a cool $2.80 billion. That's like finding an extra gecko in your terrarium, unexpected but totally welcome. Their return on equity is sitting pretty at 18.2%, which is like getting a really good interest rate on your savings account, but way better. Now, let's talk about their commercial book. It's grown by 9%, reaching $5.30 billion. That's like your favorite plant sprouting new leaves. It's a sign of healthy growth. They're making more money from fees and their treasury sales are strong, which is great news for the bank's overall health. But here's where it gets really interesting. DBS's balance sheet is rock solid. Their non-performing loan ratio is steady at 1.1%, which is like having a super reliable friend who always pays you back on time. They've also got a ton of cash set aside just in case things go south, 129% coverage, or 227% if you count the collateral. That's like having a really big umbrella for a rainy day. So, what does all this mean for you, the everyday investor? Well, if you're holding DBS stock, you might be grinning like a happy iguana right now. They're paying out a dividend of 54 cents per share for this quarter. That's like getting a little bonus just for being a shareholder. Slide 2. DBS has shown some solid growth in their 2Q 2024 numbers. Their total income jumped 9% year over year, hitting 5,482 million Singapore dollars. That's pretty impressive. The star of the show was their commercial book, which also grew 9%. This boost came from higher net interest income, record fees, and more sales to treasury customers. It's like DBS found a few extra gears and really revved up their engine. Now, here's where it gets interesting. While their income grew, their expenses also went up by 12%. It's like they're spending more to make more. Their net profit increased by 4%, reaching 2,803 million Singapore dollars. Not too shabby, right? But here's the kicker, their allowances shot up by over 100%. That's like setting aside a much bigger emergency fund. They're being cautious, which is smart in today's unpredictable market. Overall, DBS seems to be playing a balanced game, growing their income while also preparing for any bumps in the road ahead. It's a strategy that could pay off in the long run. Slide 3. Looking at this chart, we can see DBS is playing a smart game with its deposits. They've kept things steady quarter on quarter, but here's the cool part, they're putting their extra cash to work in high-quality liquid assets, HQLA. This move is boosting their liquidity ratios, which is like having a comfy financial cushion. Now, let's break down the trends. Loans have stayed pretty flat, hovering around the $425 billion mark. But check this out, their HQLA has grown from $149 billion in June 2023 to a solid $161 billion by June 2024. That's some smart money management right there. Their loan-to-deposit ratio, LDR, has dropped a bit from 80% to 77%, which means they're being cautious with lending. On the flip side, their liquidity coverage ratio, LCR, has jumped from 146% to 148%. In plain English, DBS is keeping more cash on hand to weather any financial storms. It's like they're building a fortress with money's smart move in these uncertain times. Slide 4. DBS has knocked it out of the park this quarter, with their consumer banking and wealth management, CBG/WM, income soaring by a whopping 18%. That's like finding an extra durian in your basket, unexpected and totally awesome. Their total income hit 5.06 billion Singapore dollars, driven by higher interest income and record fees from cards and wealth management. It's like DBS found the secret sauce to make money in this market. Now, let's break it down. Investment products saw a massive 42% jump. That's like your portfolio suddenly deciding to hit the gym and bulk up overnight. Cards are also flexing their muscles with a 34% increase. On the flip side, SGD savings deposits took a tiny 4% dip, but hey, you can't win them all, right? The real showstopper is their wealth management AUM, that's assets under management for you newbies, which ballooned by 24% to a record 396 billion Singapore dollars. That's like your piggy bank suddenly turning into Fort Knox. What does this all mean for you, my savvy viewers? Well, it shows that DBS is killing it in the high-margin areas of banking. They're not just collecting deposits, they're out there making your money work harder than a Kopi uncle during morning rush hour. If you're thinking about banking stocks, DBS is showing it's got some serious financial muscles to flex. Slide 5. First off, the headline tells us the NPL ratio is holding steady at 1.1%. That's like your credit score staying put, it's not getting worse, but it's not improving either. Now, let's look at the numbers. The NPAs, or non-performing assets, have been on a bit of a roller coaster ride. They started at 5,056 million in 1H24 and ended up at 5,077 million by 2Q24. It's like your savings account with a tiny bit of interest, not much change, but at least it's not shrinking. What's catching my eye is the new NPAs row. In 1Q24, we saw a spike to 317 million, but it cooled down to 191 million in 2Q24. This is like your friend who went on a shopping spree but then tightened their belt the next month. It's good to see that trend coming down. On the flip side, the upgrades, settlements and recoveries are looking healthier in 2Q24 at 308 million compared to 196 million in 1Q24. That's like finding extra cash in your old jeans, always a nice surprise. Overall, while there are some ups and downs, DBS seems to be keeping its loan book in check. The steady NPL ratio suggests they're managing risks well, which is crucial for a bank's health. Slide 6. Let's break down this dividend chart, shall we? DBS is showing some serious love to its shareholders with a hefty 2Q dividend of 54 cents per share. Now, that's what I call a payday. Looking at the bigger picture, we can see DBS has been steadily upping its dividend game. Back in 2022, they were dishing out 33 cents per quarter. Fast forward to 2023, and boom! They cranked it up, with the dividend jumping around like a kangaroo on a trampoline. By 2024, they've settled into a groove of 54 cents per quarter. What does this mean for you? Well, if you're holding DBS shares, you're in for a treat. This dividend boost is like getting a raise without having to ask your boss. It's a clear sign that DBS is confident in its financial health and wants to share the wealth with its investors. Just remember, past performance doesn't guarantee future results, but this trend is definitely something to smile about. Slide 7. Let's break down this juicy summary from DBS, shall we? First off, they've knocked it out of the park with another strong quarter. Their first half earnings have hit a new high, with a return on equity, ROE, of 18.8%. That's like hitting a home run in the finance world. But hold on, it's not all sunshine and rainbows. DBS is keeping it real by acknowledging the choppy waters ahead. They're talking about heightened uncertainty from recent market swings and ongoing geopolitical tensions. It's like they're preparing for a potential storm while still sailing smoothly. Now, here's where it gets interesting. DBS has been busy building a fortress to weather any economic storms. They've got resilience against economic slowdowns and lower interest rates. It's like they've installed shock absorbers on their financial vehicle. And get this, they're not just playing defense. DBS has stocked up on high general allowance reserves, reduced their sensitivity to interest rate changes, and maintained a strong capital and liquidity position. It's like they've got a fully loaded Swiss Army knife of financial tools ready to tackle any challenge. What does all this mean for you and me? Well, DBS is saying they're ready to support their customers and keep delivering those sweet shareholder returns. It's like they're promising to keep the party going, even if the DJ throws in some unexpected tunes. In conclusion, DBS Group Holdings is a financial powerhouse that's firing on all cylinders. With strong financial results, a growing commercial book, and a solid balance sheet, DBS is well positioned for the future. And that's a wrap, folks.